Can private equity be fairly valued for wealth transfer? Imagine trying to put a price tag on a piece of art or a rare collectible. Now, think about doing that for private equity investments, which are often part of a wealthy person's portfolio. This is where the question of fair valuation comes into play, especially when transferring wealth from one generation to the next. Private equity investments are usually in private companies, meaning they are not traded on public stock exchanges. Because of this, there is no clear market price to reference, making valuation more complicated. To determine a fair value, experts often use methods like discounted cash flow analysis, which estimates future cash flows discounted back to today's value. They also compare similar companies or look at recent transactions of similar assets. These methods requiring detailed financial data, projections, and assumptions about market conditions. One key factor is that private equity stakes are often illiquid, meaning they cannot be sold quickly. This illiquidity is usually reflected in the valuation through discounts, which can vary depending on the investment and market environment. For example, a minority stake in a private company might be discounted more because it lacks control. The quality of the underlying assets also matters. If the investment is in a fast-growing startup or a well-established brand, that can influence its value. For celebrities or high-net-worth individuals involved in their own brands, their personal involvement can add intangible value, like brand recognition or consumer loyalty. But quantifying this influence can be tricky. Market conditions also play a role. If the economy is strong and comparable public companies are valued highly, private equity valuations tend to follow suit. When it comes to wealth transfer, fair valuation becomes even more important. It ensures that the right amount of tax is paid and that the estate is divided fairly among heirs. For wealthy celebrities, having a precise valuation helps avoid disputes and makes gifting or selling interests smoother. To do this well, it's best to work with valuation experts who understand both private equity and the unique aspects of celebrity investments. Proper documentation of the valuation process and assumptions is essential. Timing also matters. Doing valuations during stable market periods can help avoid surprises later. In the end, private equity can be fairly valued for wealth transfer, but it requires careful analysis, understanding of market factors, and sometimes a bit of expert judgment. When done correctly, it helps preserve the family's wealth and ensures a smooth transition from one generation to the next.